We saw shares of Pet Valu lose some of its value today as profits slipped from last year amid higher costs. Revenue rose by 4%, but that was mostly thanks to new locations that were open. Same-store sales were a little bit more tepid, growing less than 1%, which is a big slowdown from what we saw the same growth last year of 9.4%. The CEO of Pet Valu says this is a reflection of an industry-wide pullback in discretionary spending. Joining us now is Richard Maltsbarger. He's the president and CEO at Pet Valu. Richard, thank you so much for joining me. What does it mean when we're seeing this kind of pullback? Because presumably people still have pets. They need to feed them.
Absolutely. And good afternoon, Amber. And they do need to feed them, and they are feeding them. In fact, our business is continuing to grow, especially with premium foods. So frozen raw, our culinary lines, our super premium kibble, all of those foods are continuing to grow and really well, especially with our most loyal customers. Where we are seeing a bit of change in the industry is those discretionary products that you noted. Things like bedding, things like crates, things like apparel, things that you can put off if you need to for a little bit for your pet. Otherwise, our business is continuing to be strong, and we're really excited about the upside and some of the new launches we have coming this quarter.
The quality of the pet food is interesting to me because I think about somebody who had to purchase food for my children, you know, the price of fruit. I feel like I'm eating less fruit because I want to save it for them. What do people with pets do? Like, do they still feel like they need the ultra fancy food, or do they start to move more and more towards dry kibble?
Really, we're seeing a dichotomy in the industry. So there are parts of the industry that are absolutely feeling the need to trade down or trade over to less expensive. We've got great value options in what we would call the super premium grocery level, such as our Performer Trend Naturals that's growing really strongly within our stores, as well as our own Performer Trend Treats are doing well that provide a value to the customer. At the other end of the scale are super premium products like frozen raw, or our culinary goods like freeze-dried raw are amongst our fastest growing, as there are certain customers who just refuse to trade off quality and prefer to be able to make sure that their pet can get the very best that they have available. Talk
to me about your ability to increase prices for your customers. Has that kind of hit a wall?
The great news is inflation in the overall pet industry is coming down. That's really great for consumers. We'll have a bit of an adjustment within our sales over time in relation to that, but anything that can bring down the overall cost of ownership of pet is good for us long term in the industry. It also means that we're starting to see fewer cost increases from our vendors, allowing us to better manage the margins associated without needing to raise prices to do so.
I was listening to the conference call that you were having with investors, and I was shocked that, was it 80% of the customers are on your loyalty rewards program? That strikes me as very high.
It's quite successful. It's almost 3 million active customers across Canada. It's grown from less than 50% only 4 years ago. So our teams in our stores, both our franchise teams and our corporate teams, have done a great job of activating that program. Our merchandising teams have added a lot new brands to that program to be able to expand the applicability, and it really gives us an advantage. Because with a loyalty program like that, we don't need to do as many mass promotions. We can be very selective and targeted in the promotions we do to continue to take share in this market.
And yet traffic is down, so the number of people coming to the stores are down, but basket is up. I mean, what is that trend? What does that tell us?
So we have really two things driving some transaction challenge. As people are economizing a bit, rather than trading off their food and the brand that they use, they're actually trading up to larger bag sizes in our stores. So you might have been buying a medium bag every 4 weeks. You now buy a large bag that covers around 6 to 7 weeks. So that means you don't have to come back to the store quite as often for necessity-based trips. The other change we're seeing is some of the small animals like reptiles and fish and mammals that were really adopted during COVID, call it the hamsters and the gerbils. Some of those aren't being replaced as unfortunately they pass from people's homes. Many of those generate weekly trips for feeders such as feeder fish or crickets. So that's depressing traffic just a bit. The good news is our dog and our cat business, really the core of our business, continues to grow very strongly, especially in the consumables. I mean, my house alone is a great example. My son's now adopted a rescue named Kenny. My daughter adopted a rescue named Phoebe. So we're still seeing adoptions in the industry. We're just back down to sort of our pre-pandemic norms.
Competition is not something that is new. You've had to deal with Amazon and others. Chewy recently announced that they would be coming to Canada offering services first and delivering to Southern Ontario. What, if any, effect have you seen from an entrant like Chewy, and what kind of threat do they pose going forward?
So we've not seen anything different than what we were expecting. They did come into the market about the middle part of last year, well in line with the expectations we have for what that type of entry looks like. We've, of course, been competing with Amazon and other online players for over a decade now. The great news is with the supply chain transformation that we're undertaking, we're going to have the same automation and the same bulk picking advantages and productivity that any other pet specialty player has in North America. We're activating that automation in our GTA distribution center at the end of Q2, and we'll be doing the same in our Vancouver and Calgary distribution centers across the next 2 years.
What's interesting is that, as everybody pushes to online, as a retailer, you're still adding physical stores and plan to 40 to 50 stores a year. There are challenges in the real estate market. Are they working to your advantage? Are you able to get more favorable rates, or is it presenting a bit of a challenge in finding locations?
We're not seeing a challenge in finding locations. There are some slowdowns of perhaps, say, new developments, but the great news is that we can go into second use space in great shopping centers. That is where we're seeing a bit of an advantage. There is a little bit of a buyer's market for those of us who are expanding, in the form that we are a great tenant for our real estate partners. And so we're working very closely with them to identify when new space comes available in a great shopping center where we want to be, or just as important for our business, many of our stores, over 200, are still less than 3,000 square feet. So when an adjacent retail property opens up, we can actually expand the store and help strengthen our franchisees' go-to-market.